One of the pairs that I'll be taking this week is going to be GBPUSD. I'm going to be showing you the full breakdown in this very video, and also I'm going to show you how I'm going to be joining price to where price is going to. But before we go into that, if you're seeing me for the very first time, my name is Divine. What I do here is document how I trade and make videos that will improve how you approach trading. If you want to be something like this video, subscribe, drop a comment. What pair are you looking at this very week? I'll be right back. Now, for us to simply understand how we are going to join price to where price is going to on GBPUSD, the first thing that we need to understand is to simply understand where price is going to on the higher time frame. That the moment we understand where price is going to on the higher time frame, then we'll come down to the lower time frame and join price to continue to go to where price is going to. In this case here, the higher time frame is going to be daily time frame. That on daily time frame, we want to identify two things: the support and resistance level, and again the key levels. And the very first way to identify support and resistance is simply to zoom in and see the bigger picture that price is creating. In this case here, we can see that price is simply giving us this low here, and price is currently at this point here. That we're going to simply be drawing our support level from this point here and our resistance level from this point here. This is a valid support and a resistance, and the reason it's valid is because it has at least 3 or more touches on the trend. Now, having identified this support and resistance, the next thing I want to do is simply interpret what price is doing. In this case here, we can see that price is coming from a support level and price is heading to a what? Resistance level. That we want to simply understand if price is going to continue to go to the upside or price is going to reverse to the downside. In this case, for us to simply understand that, we want to simply identify the key levels. That the key level is going to tell us if price is going to continue to the upside or price is going to continue to the downside. In this case, here is the support key level, and also here is also another support key level, and then here is the resistance key level. In this case here, we are able to identify 3 key levels, one acting as a resistance key level and then the other 2 acting as a support key level. We want to basically use this key level to understand market structure, to know if price is going to continue to the upside or price is going to reverse to the downside. In this case, for us to know that, it has to be on the 4 hours time frame. On the 4 hours time frame, we are going to simply understand the market structure and then identify supply or demand zone. In this case here, we are going to be using the recent key level to identify market structure and as well supply and demand zone. In this case, here is obviously the recent key level, and here is also the recent key level, right? How the price move from this point to this point. And for us to do that, we can tell that price was simply giving us a break of structure. Why? Because here is acting as a swing low, here was a previous high that caused a break of structure, and here is currently a high. Now the next thing we want to do is simply understand the demand zone that has been created since price moved from this point to this point. In this case here, we can only identify one demand zone, which is simply at this point here. That is either price continue to the upside or price simply reverse from this point and come into this zone to continue the uptrend. In this case here, we want to simply go to the 1 hour time frame and refine this zone and identify the point that price have to create a confirmation that price is about to go to the downside. Now, for us to simply refine this particular demand zone, we want to simply use a specific candlestick to represent this full zone. In this case, this is the candlestick we're going to be using to represent this demand zone, causing it to become a point of interest. Now the next movement is simply understand the point that price has to give us a confirmation that price is about to go to the downside. In this case here, price has been in an uptrend, and here is obviously the last swing low that price needs to take out to confirm a downtrend. In this case here, for us to simply understand if price is going to continue to the upside or continue to the downside, we want to go to the 15 minutes time frame and understand the advanced market structure that price has been creating. Now in the 15 minutes time frame, our focus is simply on that last low that price will have to take out to confirm a downtrend. In this case, our focus is simply on this particular low here. How the price move from here to this point? Where is the liquidity? Where is the point of interest that price has created? In this case, here is obviously the point of interest that should trigger a buy movement. That means here is obviously a POI that could have triggered a buy movement. Why? Because there is liquidity, there's a point of interest. But in this case, price failed the point of interest, giving us a confirmation that price might likely go to the downside. Now because price failed this particular POI, here becomes a swing low that price will take out, and here becomes a swing high that price might not take out. In this case here, for us to simply identify an entry, we want to simply understand how price will move from this swing high to this swing low, because we are expecting price to simply fail this swing low here. Why? Because price was supposed to respect this particular demand point of interest, but instead price failed. Now interest is simply identify a supply point of interest from this swing high to this swing low. In this case, this is obviously an obvious POI that might trigger the next sell. And for this POI to be valid, there has to be liquidity that will hold this particular POI. In this case here, this place is acting as a liquidity that most likely will trigger this point of interest, because it's simply an equal high. There's a liquidity point that will trigger this particular point of interest. What this means is this: an entry on GBPUSD is to simply expect a sell. That if price open tomorrow will be Monday, I want to simply see price buy to the upside, come into this zone, and then I'm going to look for a sell opportunity for price to take out this low that is here. In this case, my entry is going to be from here, short from here, stop loss is going to be here, and my take profit is going to be at this point here. This is going to be my entry for a 1:6 risk to reward. Now another opportunity for me to simply buy is simply this, that I can clearly see what price is doing at this point here, right? That this place is simply a low that will confirm the downtrend. That if price take out this particular low, it's going to be a strong sell. But in this case, this low is simply going to create a high at this point here that might trigger a sell. That means if you want to likely buy from this particular point, you can simply continue price from here for a buy, and most likely here will be your entry for a buy, and your take profits is going to be here. This is also a valid trade, and depending on what price does, if price open, I might as well take this particular buy movement from here. My take profit is going to be at this POI. My stop loss is going to be below this point here for a 16 pip stop loss, and a 1:3 risk to reward. This is also a valid trade, but on the long run, price most likely might sell. That will be all for this very video. I'm going to see you on the next one. Peace.